My name is Anil Paranjape. I am a director on the board of Avalara India, and at this point, I'm also heading Avalara India, both the site and the business. And I'm going to talk to you about the future of tax compliance and how we can prepare ourselves for that. When it comes to compliance, there are three pillars on the compliance actually rests. One is the knowledge, higher the compliance, the complexity, lower the complexity of the system, higher the compliance, and again, lower the cost of compliance, higher the compliance itself. This is something that is proved across the world in study after study. But cost has another component, which is the cost of non-compliance. Obviously, higher the cost of non-compliance, higher the incentive to comply, and that is also proven again. When it comes to knowledge, there are a few attributes that we all know. Knowledge needs to be always updated. It needs to be global, especially for cross-border sellers. It needs to be precise unless you want your shipment to be stuck in customs. And it needs to be understandable because we are talking about a lot of legal mumbo jumbo. I'm going to walk you through a bunch of numbers that explain the compliance issue or complexity across the world, starting with this number. At a global level, it seems like a small number, but if you know what it is, then it is a daunting number. It is a number of changes in sales tax laws, rules, regulations, and rulings, court rulings that explain things or clarify things. I'm not talking about the rate changes, okay? I'm just talking about changes in these enacted across the world in 2020 alone. That's a mind-boggling number because that means almost 100 changes a day, right? Anybody in their right mind will know that such a complexity and such volatility can simply not be comprehended by anybody, any human, even whiz-bang tax advisors. How do we know this number? Because it's our business to know. As the preeminent cloud-based tax compliance platform, we track all of this 24/7. In fact, our portfolio company, TTR, is the preeminent repository of tax research and knowledge across the world that even seasoned tax advisors come to. This kind of volatility obviously gives rise to complexity. Right? Volatility begets complexity. That's a no-brainer. But complexity is also driven by something else, e-commerce, for example. Right? In 2020, in the first 3 months, we squeezed so much growth in e-commerce penetration, as much as what we had squeezed in the previous 10 years before the pandemic. It's almost 4,000% increase of the velocity of that growth. And that's mind-boggling because the cross-border, especially the cross-border increase almost twice the rate compared to the domestic counterpart. That increases complexity tremendously also because in 2018, the US Supreme Court did something to increase the boundaries, the tax boundaries of the state of South Dakota by almost 2.5 lakh%. What it means is they said that, hey, from now onwards, everybody that's selling anything to anybody in South Dakota is liable to collect and pay sales taxes to the state of South Dakota, right? Suddenly the tax boundaries became global. It didn't matter where you, the seller, are, whether it's Timbuktu or Jumritalai or whatever, you were actually liable to collect and pay sales taxes if you sold to anybody in the state. Obviously, that was music to the ears of so many jurisdictions, and pretty much everybody did something similar. In 3 years, every cross-border seller is now tax liable globally, right? What about the cost? The cost of compliance, the gap between the cost of compliance and non-compliance is almost 300%. There's research to prove that. And this ratio, you may believe that, oh, that's okay, but the probability of being caught, being audited is so low that it's probably not worth to comply. But then think again, as I'll talk later, that probability is increasing of being scrutinized, being audited tremendously across the world. We already see that. What about the cost of compliance itself? 2.5% globally of GDP is spent on tax compliance. But you'll say, well, GDP nationwide, that's a big number. That's a big institution or big, a big economy-wide thing. What about me? What about my business? Well, we have a number for that as well. 0.2% of an average enterprise sales is spent just on indirect tax compliance. And the smaller you are, obviously, the percentage cost is much higher, as the graph shows here. This is, by the way, World Bank data. Before we go into the future of indirect tax compliance, let me explain how governments use indirect tax compliance or indirect taxes. They use it as a good tax balloon. And as all balloons do, when you squeeze it in one place, it pops up in another, right? What is good tax, by the way? It's a tax that raises a lot of money extremely fast without pissing off a whole bunch of people, and people are voters, and politicians know that, obviously, right? For an example, right, why indirect tax is good tax? Just in India, the central government's 50% revenue actually comes from indirect taxes. And it works fast. You change something, the next transaction onwards, the money starts flowing into government coffers. That doesn't happen with direct taxes. And if you increase, let's say, GST rate of something by 1%, right? Most people don't even notice that. But you increase direct tax rate, income tax rate by 1%, almost everybody starts fighting and start making noise. Governments know that, and they use indirect taxes in order to essentially spur the economy or milk the economy as they need. For example, during the pandemic, there are lots of clear cases where, for example, in Ohio, the takeout food was exempt, but dine-in food was not. Obviously, to incentivize people to take out food rather than dining in. In Wisconsin, the digital online education was exempt, but webinars were not exempt, obviously to milk businesses, but not to milk the poor students who were learning from home. Even outside pandemic, whenever, for example, wildfires happened in California, tremendous tax incentives were given in order to spur the economy. And obviously, as you know, when the government gives something, it also takes it away later because they need their revenue as well. And therefore, the balloon pops up in another direction, right? We expect all the action in government tax compliance in indirect taxes going forward, as we are seeing even now. Armed with this knowledge, it's actually very easy to decide or estimate where the impact is going to be and what kind of impact it will have on tax, right? So let's do a simple exercise. It's actually not rocket science. If, for example, you believe that political, social, and environmental uncertainty is going to increase, then obviously economy is going to be in this, recession and the opposite of recession. Therefore, the volatility will increase because the government will respond to that with tax measures. Volatility increases, complexity increases. E-commerce is going to increase. I think that's a no-brainer, especially cross-border. It's already increasing. It's already high. As a result, the tax reach is going to increase. Again, complexity is going to increase. The government will obviously simplify systems in order to ease compliance. But overall, we believe, because of the previous two phenomena, the overall complexity of compliance is going to increase substantially. What about cost? Technology is going to mature. I listed some of that. We all know that. That is something that is expected by everybody. But you know what? The governments also have access to these technologies. In fact, across the world, they're using these technologies in really sophisticated ways in order to really understand who is complying and who's not, in order to decrease the revenue gap or the tax gap, as they call it. As a result, the probability of scrutiny is increasing day by day. In fact, US IRS just announced that in 2021, they will increase the audit of SME taxpayers by 50%. That's an announcement. Obviously, they will give compliance incentives and holidays, et cetera, in order to increase compliance. But once they give that and you don't comply, obviously the penalties are going to increase as well. Complexity will increase, as we saw, but technology will also help. I think that's something that is a given. Overall, however, the cost will probably remain the same, maybe decrease a little bit because of technology. The reason is the technology needs to be more sophisticated in dealing with all this complexity. But the cost will shift from your manual-based processes, from your advisor-based processes, CA-based processes, more to automated processes. Indirect tax compliance, as a result, I think the burden is simply going to increase. The complexity is going to increase. And that's a writing on the wall that is very clear to us. We are seeing it across the world in jurisdiction after jurisdiction. In fact, we don't need to look at the future for that. You, the cross-border sellers, are already seeing this. These are your pain points as articulated by you. But you know what? A lot of these pain points are in fact already being met, solved by automated platforms like us. This is a great place to actually introduce ourselves as a company. I'll do that very briefly. We are Avalara, 17 years doing nothing but global indirect tax compliance, thousands and thousands of customers worldwide on our platforms, thousands of integrations, pretty much every ERP, every POS, CRM, accounting systems that you use in your business, we already work seamlessly with that. We have tremendous money that actually flows through us on our platform in tax remittance. And last count is actually more than 3 million. It's more like 3.1 million returns that we processed every year on our platform, including our services ourselves, right? We are by far the global leader in indirect tax automation software. And don't take my word for it. This is something that IDC recently said in 2021. The purple bubble there is us, Avalara, by far the leader compared to anybody in the world in our sphere, that is worldwide SaaS and cloud-enabled sales tax automation. When it comes to interactions between a business and the government, there are multiple things that happen, right? The governments actually make rules. We comply with those. We as businesses, the government may like it or not. They send notices, do audits. We deal with the audits, right? All of that happens. What we do on our platform is actually simplify and automate almost all these transactions today, right? We are already doing that. On this platform, which is 6 parts, insights from the right side, which is all the knowledge that we talked about, TTR, Avalara platform, etc. Licenses, wherever you need to register, because you're liable to collect and pay sales taxes, we tell you where that is. We help you do that. We help you with automated tax calculations, not just for returns processing, but actually real time. While you are invoicing, while you are actually selling, not just sales tax or VAT or GST, but actually even customs duties, a lot of special taxes. We obviously prepare your returns or help you prepare those returns on our platform. There are lots of document management that we do in exemption certificates, all of that. And then fiscal representation. We work with the government, we represent them, we represent you. We essentially collect and remit taxes on your behalf to a whole bunch of governments. And all this happens on a very robust platform, thousands of integrations, as I said, always updated content and rules, and very robust. I said robust, and as an example, in last year's Black Friday, our tax engine fielded more than 160 million calls in a single day, right? That kind of infrastructure we are talking about. No matter where you are I like to say, we have you covered where you are and where you sell, right? What about future? The future of tax compliance again rests on three pillars. Something magic about the number three. E-invoicing, we know that. Live reporting and split payments. What does that mean? E-invoicing, we know. E-invoicing is notifying the government before invoicing. Live reporting is once the government knows already before you invoice, then why do you need to wait for the end of the month in order to file your return? You file it every day at the end of the day. And then if the government already knows all of that, then why would they wait for a long time to get your tax payment? They want to be paid when you get paid. So at the payment itself, at the receipt itself, the payment is split. You get your share, the government gets theirs, right? India has leapfrogged the world in e-invoicing already. We know that. India, in fact, tried to leapfrog even in live reporting. Remember the GSTR 2A that we have, all real time. It's rolled back, but I think the writing is on the wall, as you see here. The future of compliance is real-time compliance, always on, right? What about the future proofing? How do you prepare for something like this real-time compliance? Well, it's a few steps. You need to first understand what you need to comply with. Come to our platform, learn about global compliance needs, challenges. There are lots of tools that actually, free tools that lets you or helps you assess your actual current compliance risk completely free of cost, right? And then you invest in a tax automation software, for example, ours, which is global because you're selling globally, cloud-based because you want it to be always up to date, and secure because it's your data, very sensitive data, and the government actually wants you to actually interact with them from a secure platform. And then you automate with all this, not just at the document or a task level, but at workflow level. What's a document level automation? Let's say you do a whole bunch of things manually and then just press a button and the software prepares your GSTR1, for example, right? That's a document level automation. Task level is, you have your sales register and your GSTR1, and then you press a button and the reconciliation kind of task happens automatically. But that's not enough in real-time compliance. What you need is workflow level, all the way from selling through invoicing, e-way bills, to returns preparation, remittance, split payments, all of that happening in an automated way in an always on reconciliation cloud, right? That is what we are talking about when it comes to workflow automation. And then you need to institutionalize all of that. You need to make it an always on process because the government in this real-time compliance world is going to expect nothing less. In general, we believe that true compliance, not just us actually, the government increasingly believe that it's a long-term plan, not a short-sighted win. That's what government is putting in place. That's what we are reacting to, and that's what we are preparing for. So let's get started now. Feel free to visit us here. Welcome at our booth or at avalara.com. For all kinds of questions that you may have, we have a whole bunch of people at our booth at this event, and I encourage you and welcome you to come and talk to us. Thank you very much.